Ever wonder how to analyze a stock chart? Let's dive into it. Stock chart analysis can feel like decoding a complex secret language. But, fear not. It's a skill that can be mastered, and it's one that's pivotal for investors. The ability to read these charts allows us to understand the past, present, and potential future behavior of a stock. Today, we'll be using Canopy Growth as our case study. Canopy Growth is a Canadian cannabis company that's publicly traded on the New York Stock Exchange. Now, why Canopy Growth, you might ask? Well, it's a dynamic company in a rapidly evolving industry, which makes it an interesting and educational example. Plus, it's always good to mix things up a bit, isn't it? So, grab your magnifying glass, put on your detective hat, and let's get ready to delve into the world of stock chart analysis. Now that we have some context, let's begin our analysis. To analyze a stock chart, we use technical indicators. Today we'll focus on three popular ones: RSI, MACD, and TRIX. RSI, or the Relative Strength Index, oscillates between 0 and 100, giving us an idea of whether a stock is overbought or oversold. A reading over 70 suggests a stock may be overbought, while a reading under 30 suggests it may be oversold. For Canopy Growth, the RSI is currently around 50, indicating no clear trend and suggesting the price is moving within a lateral range. Next, let's talk about MACD, the Moving Average Convergence Divergence. This indicator helps us understand potential buy and sell points by showing the relationship between two moving averages of a stock's price. When the MACD crosses above the signal line, it may be a good time to buy. Conversely, when it falls below the signal line, it might be a good time to sell. For Canopy Growth, the MACD lines are close to crossing, hinting at a possible trend change. However, we should wait for confirmation as the lines are also near zero, reflecting the lack of a defined trend. Finally, we have the TRIX, or Triple Exponential Moving Average. This indicator smoothens price fluctuations and filters out volatility, making it easier to identify the stock's direction. For Canopy Growth, the TRIX is above zero, suggesting an upward trend. Interestingly, there's a divergence between the TRIX and the price. The TRIX is showing an upward movement, while the price is yet to show a clear bullish trend. This divergence may be an early signal that the price might soon rise and break resistance. By understanding these indicators, we can gain insight into the stock's performance. But remember, technical analysis is just one tool in a trader's toolkit. It's always best to combine it with fundamental analysis and other research to make the most informed decisions. Next, let's identify the support and resistance levels of the stock. These are critical zones on our chart where the price tends to bounce or break, acting like barriers in the path of the price movement. Think of the support level as the floor that props up the price, and the resistance level as the ceiling that caps the price's rise. Now, on to Canopy Growth. We notice that the price is currently testing a resistance level, which coincides with its previous peak. If the price manages to break this level, we could be looking at the start of a new upward trend, heading towards the next resistance level. Conversely, if the price fails to surpass this level, we might see it fall back to the support level beneath. These levels aren't set in stone, they're more like zones where the price might react. These levels help us predict where the price might bounce or break. So, what buying signals can we get from our analysis? Let's dissect the cues that could hint at potential buying opportunities. The TRIX divergence is a key one. Here's why. While the TRIX is showing an upward trend, the price isn't reflecting a clear bullish trend just yet. This discrepancy could be a precursor to a price surge. Next, we have the crosses in the Relative Strength Index, or RSI, and the Moving Average Convergence Divergence, better known as the MACD. These crosses could signal a shift in the market's momentum towards an uptrend. And finally, we can't overlook the importance of resistance breakout. If the price manages to break through the resistance level, it could trigger a new bullish trend, paving the way for potential investment opportunities. Keep in mind, these are potential signals and should be used in conjunction with other research and due diligence. These signals could indicate potential investment opportunities. Let's summarize what we've learned today. We've taken a deep dive into the use of technical indicators like the RSI, MACD, and TRIX, and how they can provide valuable insights into stock trends. We've also discovered how to identify critical support and resistance levels, which can indicate potential price bounce or breakpoints. Finally, we've discussed how to interpret buying signals, such as TRIX and price divergence. With this knowledge, you're now better equipped to analyze a stock chart. Happy investing!